So coming to the first stage into the integration process, the first stage, which called as a pre-acquisition stage, under which we discuss the subpoints as like due diligence, negotiation announcement, and the closure. So this is going to deal with the pre-closure of the merger, right? The first stage as we look at is a due diligence. As we have been discussing the previous topic, that due diligence is basically try to know about the financial, accounting, operational, marketing, and also the human aspects in terms of what is the possibilities of realization of the synergies, right? Sharing of synergy benefits. So, and also try to look at the what are the challenges that they may face in terms of regulatory aspects, like post integration or during the merger deal, and also the cultural assessments. So these are basically the due diligence that has been looked into, noted down in because so they require to plan very well. The next comes a negotiation announcement. Once the due diligence is successful from both the parties, right, then the acquiring company or the target company both will make a public announcement in the newspaper, in the media, and also inform to the respective regulators and take the approval from the court of law. So once this public announcement has been done, right, the share price which has been informed to the public or to the shareholder, and the exchange of shares takes place. Might be based on the depend upon the deal, whether it's a cash transaction or in a share exchange transaction. The transactions gets completed and the deal get closed, right? So once the deal get closed, what happens here is the target company stocks would be get delisted from the respective exchange, and the shareholders will get the cash or the stock in exchange of the share of the target company with respect to the acquiring company, and fulfilling the formalities with respect to the regulatory, fulfilling the formalities with respect to the government with tax, and taking the approval. So once this has been done, this is the first stage, prerequisite stage for carrying out the integration process. Because if there is any hurdles and any of this activity is been pending, the integration activity cannot be carried forward further, right? So once the first stage has been clear, then the second stage of the integration that deals with foundation building. So here the deal is been get closed, the settlement is been done. Now they start planning about the integration. In this second stage, what is called as a foundation building, we come across three different layers. One is launch, acquisition, integration workout, and strategy formulation. The first step here is about like launch. What happens here is here the acquiring company and the target company, right, top executives are being identified, and they form a committee called as the integration committee. And this integration committee would be headed by one of the most senior and experienced leader, and form a committee which is having the top level managers or the senior level managers from both the acquiring company as well as from the target company. So they will introduce the integration manager, and he is responsible for overall process of the integration. And this integration, once the team has been designed, the leadership role has been fixed, right? So then the team and the leader will chuck it out the workout plan, nothing, basically what we call as a blueprint, right? So blueprint for completion of the integration, where two companies completely transform into one, right? So there will not be any two different companies, it will be only one company. And these blueprint or the integration process depends upon the different companies, right? So not all the companies will have the same integration plan or same integration schedule. It depends upon the company to company, it depends upon the size to the size. Let's take the example of like SBI with the associate banks, right? So the challenge of integration for the SBI bank was very clearly the 3 months time that they have been taken to integrate. It was very easy for them to integrate. The only challenges that they faced were with the IT, the rest with the customers and the staff, and the cultural aspects were known, familiar, and it was manageable to them. The rest other thing was only with respect to integrating of the softwares. Since the challenge what the SBI faced in this integration was because different banks and their associate banks has a different vendors. SBI has a different vendor who is providing the IT services, whereas the other associate banks has a different vendors. The vendors were like Infosys, TCS, Oracle Financial. They used to provide a financial and banking software to this bank. They used to work as a back-end operations to their banks. That was a major challenge for an SBI during the integration process, and it said like it would be completing within the 3 months, right? When you look at with the case of like the same integration process for the Sunforma and with the Ranbaxy, they said like they require minimum of 2 years. They have prepared a blueprint for the 2 years to implement because the size differs. Ranbaxy as well as like Sun Pharmaceutical has a larger size and widely spread across the global, right? If you look at both the companies combined together, the employee strength comes out to be nearly 30,000 of the employees, and they have a 47 plants, and the manufacturing and the business was spread across 65 plus countries, right? So that was the biggest challenge with respect to integration. It is very easy for making a deal of merger, but integration is very challenging task for any of the merger, right? But when you look at the same plan of foundation building or launch or acquisition plan of SBI, right, they had a very clear cut blueprint of rationalizing the banks and trying to shut down. Very clearly they had a plan to shut down 1500 branches which were duplicate, right? Duplicating is nothing but overlapping in the same location, same area, right? We has to have three different banks, State Bank of Maharashtra and State Bank of India. So these duplications they wanted to reduce it and rationalize the bank's efficiency, right? The third stage, the third point in the foundation building of the integration process deal with strategy formulation, right? So this strategy formulation is linked with the due diligence. When in the first stage the due diligence is being done, possibilities of synergy benefits were identified. Now they try to plan it, what and when, at what time the synergy should actually be realized. If you look at, there were very clear cut synergy benefit that they are planned to realize. In the case of like Ranbaxy and Sunpharma, they clearly said like they are going to realize a benefit of $250 million in the next coming 2 years by having a synchronization or trying to synergize in operational synergy of supply chain management, logistic and manufacturing, right? So this is only the three key areas that they have been identified to get the synergy benefit and realize the synergy benefit, that is a saving of $250 million, right? So this is what the strategy formulation, this is how we need to synchronize, we need to integrate and realize the benefit. This is the plan which they will set the target and start implementing, right? This is the second stage. Coming to the third stage of the integration process, it is about like rapid integration. In the case of rapid integration, what happens is actual plan start implementing, right? So here again it depends upon size and the nature of the company. It would not be at one shot they will try to change the process, change the policies, change the system, right? So in a phased manner they will start implementing it, right? So first step here is about the implementation. So what they do is they will only partially implement the few of the functional areas. As we look at the case of like Sun Pharma and the Ranbaxy, they were focused only on integrating supply chain logistic, right? Not all accounting, finance, right, corporate offices, they are not planned to integrate completely. They have planned only to integrate few of the functional areas, right? So that is very clearly plan of implementing in a phased manner, right? So once they implement it, right, so there would be a continuous assessment. The second point what we look at here is course assessment and adjustment, right? So once we implement, right, there would be a periodical audits would be conducted, periodical trainings would be given to the employees, because there is a change in the policies, change in the procedure, change in the practices, right? And continuous feedbacks are being taken from the client, from the customers, from the employees, from the staff, right, to look for the better improvement in the integration process. So once the gradually integration takes place, coming to the fourth stage of the integration, that is full-fledged integration. As per the blueprint, right, so they will be having a target that within this time frame they would like to completely integrate and make it as a one company. Fine. So in the last stage, that is assimilation stage, long-term plan evaluation. So once the full company start implementing the integration for all the functional areas, right, so over a period of time, that is as per the synergy benefit realization, they will try to look at and try to evaluate whether it is been implemented as per the blueprint, right, and take the again the conduct an audit, conduct a continuously feedback for a full-fledged integrations, right. The final thing that comes into the picture is capitalization on the success. What is this capitalization of the success? Is nothing but realizing the return on investment or realizing the synergy benefits. What synergy benefit that they have been realized? Let's say that there is a synergy benefit of cost saving of 150 million by integration of supply chain and logistics, whether they could able to meet that synergy benefit. This is how they need to look at what went wrong, how successful they were in terms of implementing, right? So this is about completely about integration. It's not a one-time activity or not a short-term activity. It's a long-term, well-planned, well implementation, right? If it is well planned, well implemented, with patiently, with rationally, the merger will give a very successful result. If the integration plan is very poorly planned, again it will lead to a disaster. Fine. Thank you. We'll stop here about the integration process, and the next class will take up the next topic.